Hello and welcome to Stocks Down Under. My name is Stuart Roberts and I'm one of the co-founders of our service. And joining me today from Perth on Friday, the 21st of April, 2023, is the legendary Mr. Simon Hay of Leo Lithium, ASX LLL. Simon, good afternoon.
Hi, Stuart. How are you? Good to be with you.
Now, I don't use the term legendary very often, but there's a whole lot of people who used to be Galaxy Resources shareholders who speak very highly of you. It's fair to say you created a lot of shareholder value for those people.
Yeah, well, Galaxy was a great ride for a number of shareholders. Wasn't just me, of course. We had a really good team at Galaxy. A number of those have come across to Leo, hopefully to replicate the same thing. But yeah, it was a great ride, fascinating time in the market, and we've got something similar going on now in the market. You know, the whole lithium industry is absolutely fascinating, continues to be.
Right. So there's a sense out there in some circles. I don't share this personally that lithium's going back to the bad old days of 2019 when you were taking the reins at Galaxy. Obviously, things can turn on a dime here, given the massive underlying demand for this wonderful commodity, and that's what helped you at that time. So to your point, history is about to repeat itself.
Yeah, for sure. I think. The world's just so different to 2019, the lithium world anyway. You know, from where we are now to then, OEMs have really changed and retooled their facilities. So many more models now on the EV models on the market, and new ones coming all the time. The industry itself has grown from 300,000 tonnes LCE per annum to well over 600,000. In that time frame. I just don't have the number off the top of my head, but that the industry is so much more larger, and the momentum is substantial. The other thing I'd say is, point to the macro factors around what the governments have done in many jurisdictions around entrenching that future volume growth for lithium. So it continues to be a great commodity with an enormous future in front of it.
Right. We'll talk in a second about your flagship asset, which is the Goulamina lithium project in southern Mali. But let's talk for a second about what's just happened in the lithium world. You've got Albemarle tilting for Liontown. Now, what's interesting there is they're about the same stage of development as you, coming on stream next year. Resource of about 150 million tonnes and grades not dissimilar, well above 1%. The only thing that's different is the jurisdiction, and you're an open pit and they're underground. And yet Albemarle has got a checkbook out for something north of 5 billion. Have I got a deal for them? You're capitalised at about 1/10 of that.
Yeah, that's right. Look, it is a peer comparison that I use myself regularly. And this was before the Liontown Albemarle bid surfaced. So, part of the reason for doing that is that value discrepancy between Leo and Liontown. Now, of course, there's a couple of drawbacks we have, sovereign risk being a key one, being in Mali, but so many other things are comparable that, we do scratch our head at that valuation discrepancy.
Right. Now, let's talk about this perceived sovereign risk issue. Now, Mali is a low-income country in West Africa. Had a coup in 2020 and then another one in 2021. About the only thing that's gone wrong for miners within the country, and this is a major gold producer in West Africa, is for a while there the ECOWAS countries in West Africa were at odds with Mali, who retaliated by closing their borders. Firefinch, the company that fostered your asset for a long time, had some problems with getting equipment through the borders at that time. How did those coups affect you in terms of your development over the last couple of years?
So it's had no impact at all on Goulamina project at all. Now, we were at a different stage compared to Firefinch. Firefinch were trying to get equipment across the border from Côte d'Ivoire into Mali. That was one of the borders that closed. And that's provided us with a lot of learnings. As we prepare our logistics chain, both inbound project equipment and outbound product, we are focused on having a number of different logistics chains available. So we're currently looking at 2 different ports in Côte d'Ivoire. Next, we start looking at Dakar in Senegal, and we've also got plans to investigate Guinea as well as a product outlet source. The Guinean border did not close during the ECOWAS sanctions, so that's one that's particularly attractive to us. The other with all other parts of the project, we can get people in and out of the country. We can get funds into the country. We haven't needed to take funds out of the country as yet. Our engagement with all bureaucrats and regulators and the ministers has been pretty straightforward. We get great support from the government. They see the value in the project, not just monetary value, but jobs, a new industry, diversification for their mine industry.
Because you're the first hard rock lithium project, not just in Mali, but in the whole of West Africa.
Yeah, that's right. We'll be the first into production. There's a couple of others that are trailing us. You know, they're 1 or 2 years behind us. But yeah, we'll be the first one into production. Right.
Now, I'm really impressed as I look over the financials for Goulamina. A mere $255 million in pre-production capex, which is now spoken for thanks to you, your partners in Ganfeng and the capital that you raised in the IPO. So 255 gets you several $1 billion in DFS NPV, and that's at a ridiculously low price, even compared to the weak spot prices for spodumene concentrate. How did you luck in on such a capital efficient project?
Well, look, Ganfeng, our JV partner, has been really helpful here. First of all, they help with the flow sheet development with their vast experience in lithium.
Yeah, and for those folks who don't know, this is the second largest or the largest lithium chemicals supplier in the world, right?
Largest in China.
Largest in China,
yeah. Market cap, I think, is $20+ billion US, listed in Hong Kong. They've been in lithium for, I think, 30 odd years.
Right.
They have about 6 conversion facilities. You talk about others in Australia like Tianqi, IGO. They've got their first Australian converter coming in. Albemarle's got the Kemerton plant. Well, Ganfeng have 6, so very experienced chemicals producer. So getting back to the question, they have helped also with procurement. So they use their purchasing power and their procurement network in China to keep the cost down for us. Secondly, I think Mali and West Africa hasn't experienced a lot of the inflation pressures that Western Australia has. There's relatively few mining development projects in Mali and in West Africa. There's an established workforce, both on a construction point of view, and also an operating point of view. So we have some structural benefits in our location. They offset somewhat the sovereign risk disadvantage.
Right, and this is a monster you're sitting on. We're talking 150 million tonnes, but grade of about 1.5%. There's only about 3 or 4 undeveloped deposits that are bigger than that in the world.
That's right, and also it's getting bigger. We released some drilling results last week. We have further pegmatites that we're discovering as we extend the drilling deeper along strike and also through the deposit. We had one really interesting pegmatite discovery where we had a number of pegmatite seams, and we were drilling across the deposit to access them at depth. And we discovered a new pegmatite in the middle of a pit shell that we're already intending to mine through. So that was another great discovery, because that converts waste to ore with no additional cost.
No one saw that coming. The geotechnicians you were working with, this was a surprise to them too.
That's right. Yeah, total surprise. Yeah.
So we're on track, as per your most recent disclosures, to be producing first 6% spodumene concentrate by middle of next year. But you've got another trick up your sleeve as well. There's about 90,000 tonnes of direct shipping ore, which from this year you'll be in a position to pick up and ship off with the help of Ganfeng to users in China.
That's right. Our plans at this stage are that we can have a couple of shipments, 30,000 tonne shipments going in the 4th quarter. We've got stretch plans that we bring an extra shipment in and bring it in earlier in the 3rd quarter. So we're looking at up to 90,000 tonnes of DSO second half of this year. We haven't yet agreed the pricing with Ganfeng or who we sell it to. Discussions are underway, but it's likely that it would go to Ganfeng. They're very keen for the product. They want the lithium units. And of course, we're still working out a price because the pricing mechanism is not covered in the offtake that we have for spodumene with Ganfeng.
Right.
So yeah, that's a real opportunity we're chasing this year. Not just the financials that it brings, the financial benefits, but it also brings the benefits of understanding the ore body from an operational sense earlier, and it allows us to commission our logistics chain much earlier as well. We're testing that in the fourth quarter this year and not the second or third quarters next year with spodumene.
Right. Now, the critics would say now is the worst possible time to be commissioning a mine. We've seen some pretty big cost overruns on projects in Australia, as we all know. Now, as you pointed out, Mali's a little bit different, but that's probably a little bit of a risk. Talk to us about the options you have. If it turns out that the 255 million is not quite enough, and I'm guessing there's some contingencies in that 255, so you've given yourself some wiggle room there. Talk to us about what you would do in the event that there was a modest cost overrun in the development of this project.
Well, first of all, the DSO is the first opportunity to plug any potential gap.
Right.
So as I said, we've got 60 to 90,000 tonnes this year. We have another 90,000 tonnes available next year. Total, what we would call surplus ore to commissioning needs in 2024 is around about 180,000 tonnes. So that's the DSO opportunity. That can bring extra revenue. Secondly, I would point to the Ganfeng debt facility, which is currently undrawn, and we have $40 million US in that facility. When we put that facility in place, we mentioned it. We discussed with Ganfeng doubling that facility, so that potential exists that could go to 80 million tonnes, $80 million US. So they're the key ones. Then, and thirdly, of course, we've got commercial debt facilities, which we are talking about with a number of banks. So DSO, expanded Ganfeng debt facility, a commercial debt facility as well, and then even as we get closer to spodumene production, we could do a prepayment of spodumene to Ganfeng just to bring some cash forward. So a number of options at our opportunity to progress.
All right. Well, Simon, well done to you and the team for having brought Goulamina this far. It's been a fairly professional execution to date. Obviously, it's still the best part of a year until the first 6% spodumene starts to roll. But it sounds like great times ahead for the shareholders of Leo Lithium, who admittedly haven't done all that well in this IPO because stock came on at 70 cents. It's been as low as about 40, I think. But as Frank Sinatra saying, the best is yet to come.
Yeah, look, absolutely. We've, as a single asset company in the development cycle, this, I think you would agree, Stuart, this is something that you would see quite regularly, that your share price may underperform in the lead up to first production, especially, it's something that is common in African mining companies. So our focus is on delivering what's in front of us, delivering what we've promised to do is bring this project on middle of next year. And, that re-rating will come, of course, as you move into production, but also, we do expect the lithium price to recover as well. All indications are this is a soft period, that we will come out of it. So yeah, the good times are certainly around the corner for our shareholders.
Right. Well, keep up the good work, and we'll be following very closely.
Right. Good to talk to you. Thanks, Stuart.
Thank you.